Welcome to the Retirement Plan Playbook with Brent Pasqua, Matthew Theal, and Joshua Winterswy from RPA Wealth Management. In this podcast, we cover current events, retirement planning strategies, and provide you with the tools to help you build a successful retirement playbook in any political or financial landscape. Join Brent, Matthew, and Joshua as they navigate the issues that can make the later stages of your retirement plan challenging and help you create the best retirement plan playbook. Now, let's get to the show.
Welcome to the latest episode of the Retirement Plan Playbook. I'm your host, Brent Pasqua, and I'm joined today by my colleagues, Matthew and Joshua. Today, we're excited to have a very special guest, Amber Storms. With over 11 years of experience in the field, Amber is a certified enroll agent and has the highest credential awarded by the IRS. This means that she can practice in any state and represent any taxpayer before the IRS. Her expertise in tax preparation, advocacy, and planning is unmatched, and we're honored to have her on the show as we have had her before. We'll be discussing how to get ready for the tax season and how to maximize your deductions and minimize the taxes that you could possibly have to owe. So sit back, relax, and get ready for some valuable tips and strategies for your retirement plan with Amber Storms. Amber, how are you?
Oh, I'm doing fantastic. Brent, how are you this morning?
Doing good.
Amber, we're happy to have you back. We've had quite a few guests, and I'm proud to say that you're actually our most downloaded guest. So I'm really looking forward to these tax strategies you're going to give our listeners today.
It's tax season. Good luck to everybody.
Is this such a busy time for you? Is like the phones just start coming in and start ringing at this time of year?
Yes, you're exactly right. And may the odds be ever in your favor this tax season with all the different tax law changes. I've received a lot of different questions just in regards to the Secure Act and the different changes, how that impacts retirement contributions or withdrawals. So this is ramping up to be a very exciting tax season.
Can you give our listeners an overview of some of the key dates and deadlines that they should start thinking about and being aware of as we get into this tax season?
Oh, yes, absolutely. Well, everybody's familiar with the classic April 15th due date, but due to Emancipation Day falling on the due date, this will be moved over to April 18th instead. Also, we want to keep in mind for both our business and individual taxpayers who are in an area that was affected by a disaster, the filing date's actually been extended to May 15th instead. If you were a victim of a disaster starting December 27th, 2022, and before January 11th, 2023, any kind of penalties associated with estimated tax payments paid late or anything of that nature, that the IRS will abate those penalties. So we have a little more time to get our paperwork together in light of the recent disasters.
Can I cut you off there? So if I lived in a non-disaster state, do I file on the 18th or do I file in May, like you said?
Oh, great question. If you're not in an area that is affected by a disaster, and you can find this on FEMA's website as well as the IRS.gov website. If you're not in that area, then you want to file by the 4/18 due date.
Okay, man, they're just making everything more and more confusing.
The rules change all the time at the IRS.
So what does that mean for people in California? Does that mean they have until May? Or does that mean April for California people?
Oh, no, you're exactly right. They'll have until May.
Good to know.
Good for the procrastinators.
What are some of the common mistakes that individuals make when preparing for their taxes? And, now even with this deadline pushed out, how can we avoid them this year?
Oh, there's two things that actually come to mind. Number one, filing too early, especially if you're receiving interest, dividends, you're selling stock. Oftentimes, or even if you have a K-1, oftentimes those forms aren't correct or accurate the first time around, so they end up correcting the form. If you've already filed your tax return, it looks like you might be filing an amendment to reflect the differences with these corrected forms. And oftentimes people will file too early before getting all of their forms or having all the amounts that they need. So they might actually be leaving deductions on the table or misreporting income, and they receive an IRS love letter later on asking them, hey, why didn't you report this income? And that opens up another can of worms that we want to avoid. So definitely want to file when you have all of your information to file an accurate and thorough tax return. And then college kids and parents, we want to make sure that we're talking to one another when it comes to filing time, because oftentimes the college student will end up filing a tax return and claiming themselves, when in actuality, it should have been the parent that should have claimed them. So definitely you guys want to talk to one another, see who's claiming the exemption for that dependent.
When's the earliest you could file a tax return? Like when does the IRS start accepting those returns?
Actually, the IRS started accepting business returns on January 18th of this year, and they opened for e-file for January 23rd. But that's more so for the prior year returns, like people who still had 2021 or 2020 tax returns. You should be receiving W-2 starting, they're going to be released January 31st, and then folks should start filing then.
Because there's a certain time that you can't file any past returns or even present returns, correct?
Yes, actually, great point. At the end of every year, the IRS will shut down. It's called the modernized e-file. So they shut the system down so they can perform maintenance, make any kind of corrections before they reopen again for the next season.
Yeah, and for listeners too, we get a lot of calls into our office asking, for the Schwab 1099 brokerage statements or the 1099Rs. And if you have an investment account, your file time should be March.
Yes, agreed.
That was a really good tip you had a few minutes ago.
I agree. We have so many clients that, and I get it. You want to be prepared and get all your documents together, but you also, Amber, I think that point was great, which is you could be hurting yourself by filing too soon as well. You might forget a form, or that form might be corrected. So great tip.
Exactly. And it also helps with tax planning too. We don't want to rush to file because we want to take a moment to kind of analyze your situation and see, are you saving the right amount of tax dollars, or is there something we can do moving forward for next year? We want to make sure we're carefully analyzing the whole picture before we submit that into the IRS and the Franchise Tax Board.
That's such a good point, because there was a time on one of my returns when I had a big life change coming up the following year, and my tax preparer recommended just not even taking my refund and leaving my refund with the IRS to roll into next year's taxes, so I wouldn't have to write a large check.
Right, and that's actually that's really good advice too, just to make sure your bases are covered and your projected tax liability is met.
I noticed a lot that there are forms that get adjusted after they come out. So let's say a custodian sends you a year-end summary and then it gets adjusted, or even W-2 wages. I see that these forms will get adjusted. So then it is very important for somebody to go back and refile or re-report those adjustments that they got on that tax form if they had already filed.
Yes, exactly. Now, if you're able to file a return before the due date has been filed, we can work with you actually to file a superseding return, so you don't have to worry about an amendment. But once we pass that threshold, once we pass April 18th, then we're going to end up filing an amendment to reflect the changes from the corrected form.
That makes sense. Can you walk us through the process of itemized deductions, and what are the types of expenses are typically eligible for these types of deductions?
Oh, yes. This is probably one of the most popular questions that we receive, too. The one thing we want to make sure we're looking out for there are a couple differences between, due to not my favorite tax law change, the Tax Cuts and Jobs Act. A lot of folks believe that employee business expenses are no longer deductible, but we're not thinking about the state return. We definitely want to make sure that we are capturing all of those kind of expenses in, especially, say, for example, medical professionals. You want to make sure that you are counting all of your scrubs, any continuing education, any tools you had to purchase, because even though the IRS won't allow you to take that 2% miscellaneous deduction for those unreimbursed expenses, you can take that on your California return and benefit from that too. Also, I notice a lot of taxpayers will tend to shortchange themselves when it comes to charitable contributions. You definitely want to do your homework and go through your records, your check register, check your online records, and tally up how much you have donated over the year. Because sometimes you could end up lowballing yourself and not taking the full advantage of that deduction.
So what would, like, an example, like maybe you give a little bit more to the church than you thought. When you look back in your checkbook, you see it adds up to, multiple thousands of dollars instead of the 500 that you're estimating. Is that?
Yes, exactly. You want to make sure you tally everything up, because once again, we don't want to leave any money on the table.
So what's a good way that people can sort of figure out ahead of time what deductions they may qualify for, so they have them when they're prepared or as they get prepared for their tax appointment?
Excellent question. We actually have a checklist and a tax reference guide on our website, collaborativetaxpartners.com. You'll be able to see what your standard deduction is, what common deductions to look out for. It also show you different tax credits that are available for education or retirement contributions. So it kind of gives you a very general overview of things to look out for.
I have a quick question, Amber.
Oh, yeah.
This is, more directed at me and Josh. This is kind of turned into the mini golf podcast, but are we ever going to be able to deduct a country club membership or deduct a round of golf? How does that work?
Oh, I only wish, because if that's the case, I want to deduct my vet bills. Unfortunately, they're still considered personal expenses. However, if you're taking out a client to entertain them, you might be able to take an entertainment expense. We could definitely talk about that later.
Okay.
There's hope.
How can individuals best organize their financial records and documentation to really make tax preparation process as smooth as possible?
I always recommend using the organizer that we send you. And we do have a blank one that'll be available on our website too, because it's kind of the memory jogger of things to look out for. Also, if you have a copy of last year's return handy, definitely refer to that too. We do have those checklists and the organizers available for you on our website as well. And in addition to that, we have occupational organizer worksheets. So if you're a police officer, a firefighter, maybe you're a content creator, we created a special organizer worksheet for you to help you identify industry-specific tax deductions.
Yeah, it's pretty neat. I wouldn't have thought of a content creator, but I guess maybe we're doing the podcast, so the microphones, is that what it is?
Yes, microphone, any kind of advertising or marketing expenses. You might go to a seminar, or you might have a networking event that you attended.
So how do you identify if you're sitting down with somebody for either the first time or if you've known them for a while that they may now have expenses that they can write off that maybe they didn't know about? How do you figure that out?
This is one of my favorite parts about working in taxes, because it's a people business. So you really want to talk it out and tell me about your business. What do you do? What's the day-to-day like? What are your goals? Where have you been? Where are we going? And and the ideas start to kind of pop into mind, like ideas of deductions to look out for that may be industry specific. But really, I love hearing clients tell me about their dreams, what they're working on, their goals, because that gives me an idea of what to look out for as their tax advisor.
And your organizer's online, right? So you can do it through your computer, and it's not like you're filling out a piece of paper like the old school organizers.
Exactly. If you want to go manual, that's totally okay. But we do have the digital fillable PDF available on our website. Also, if you're already an existing client, it'll be available to you in your client portal too.
I feel like before, whenever I had my tax experience too, that I would dread doing the organizer. But what I found now, though, is that is a good kind of task to generate questions for you. It's also a good task to generate kind of what I need to collect, right? So, yes. I got married, or I had a child, or, I know I'm going to need some documents to answering yes to some of those questions on that questionnaire. So I think it's a really good preparation tool. So make sure, whoever's doing your taxes, take the time to do the organizer.
Definitely. And answer all of the questions to the best of your ability, because we're relying on these answers to prepare an accurate and thorough tax return for you. And if you don't know, I love all questions. Please ask, because I'd be more than happy to clear it up.
I think you're going to see a lot of probably 1099. Is it the interest form? What's it called? 1099I?
INT? Yes.
Yeah, the INT form. I think you're going to see a lot of those, and a lot higher than you saw probably for 10 years in a row, since interest rates were a little higher last year and people started getting some money from their savings accounts. I saw mine and I was like, whoa, I didn't realize we made that much in interest.
Definitely. I'm expecting to see more 1099 INTs and 1099Bs, because the number of day traders has gone up now.
Oh, yeah.
You know what? That's a good point, because I bet some people too who weren't receiving any form at all
are going to get one,
because I don't know the exact dollar amount in today of what you have to earn to receive that form. Amber, you can help me with that. But you're going from a non-taxable reporting situation to now you're going to have to report that interest. People are going to be potentially surprised this year.
Exactly. If it's under $10, they're not going to send you a form. If it's over the $10, you should expect to see a form.
I would imagine too, maybe if someone is low interest or maybe living on a fixed income with just Social Security, if their interest bill is high enough, they might actually end up paying some taxes on it, since that is taxable.
True. That is true, because they're going to take your Social Security benefits and add that in with your other income to see if there is taxable income.
Yeah, so more reason to get a tax plan done.
I have found also that doing the tax organizer is extremely helpful just because, like Josh was saying, it gets you prepared for the appointment, but it also creates sort of that checklist of documents that you need to gather. And before I used to look at the organizer and all the pages, I'm like, oh my gosh, I do not want to fill all this out. But it actually makes the tax appointment go much more efficiently just because you have everything organized, you document it all down. And then when I did it the first time, then I would just go back to last year's and then use that as my template and then go forward. And it makes that process even more easy to get the organizer done.
Exactly. It makes it easier and it keeps you involved in your situation. There's a lot of stuff, a lot of times where taxpayers, they'll have their memory jogged, and that will just open up that door to look into other deductions that we want to make sure that we don't miss, or even income. We don't want to miss that either because I don't want anybody to receive an IRS love letter. So,
and we talked about how the IRS is always making things more difficult. What are some of the changes and updates to the tax code that individuals should be aware of this tax season?
Well, I'm sure everybody's seen in the news that they have the increase to the IRS budget, which they're expecting to put more agents on the grounds. Like basically, they're going to be enhancing the collection activity so they can increase the revenue from people who aren't paying as much as they should be paying. So we want to just definitely keep that in mind. Like we might see audit percentages go up, or examinations really. Like basically IRS is just asking you to clarify some of the items on your return. I think we're going to see more of that. And that's why I'm stressing even more that we want to make sure we have all of our documents. We don't want to ballpark. We want to try to get as accurate a figure. So
how does that work? The IRS knows everybody's numbers and then they compare what they put on the paper, and then is that correct?
I love this question. There's actually an algorithm that the IRS uses, and they look at your figures and they say, okay, for folks who fit in this income bracket with similar deductions, where do you fall in that spectrum? If you're way off the radar, then that'll cause the IRS to,
like, an alarm goes off and then they're like, red flag. Audit.
They'll call it like the red flag, and I'm using the air quotes here. You end up with like the red flag, and they'll pull it aside for additional scrutiny by a live human being. And if they look at it and say, okay, this all makes sense to me, then we move it along the process. But if there's certain things that don't quite add up, then you might end up receiving a letter from the IRS where they're requesting more information.
Interesting.
Mm-hmm. And also, I'm so sorry. I want to make sure I add to. There's still they'll still pull people at random too to make sure that they are compliant. And this is something they do every year. It's under 1% of taxpayers per year, and they'll just pull you at random.
I have a question, but before they hired, like, audit percentages were extremely low, right?
Exactly. They didn't have the budget to go after the taxpayers who owed a larger tax liability. They only had, and I hate to use the expression, but they only had enough money to go after the low-hanging fruit, so to speak. They didn't have the funds to go after taxpayers who had more complex tax situations.
So do you think they're going to be going after more complex situations?
Yes. Now that they have the resources to do it, I think they're going to be looking a little bit closer into that.
So would that be like more like 1099 employees and maybe, sole proprietors? Is that would be considered more complex, or what?
Actually, yes, that's one of them too. Self-employment is a big one, specifically with entertainment, meals, and vehicle expenses. You want to make sure you're very accurate about that.
And then what about real estate? Like people with a lot of real estate rental properties. Is that would be considered kind of more complex?
Definitely be. That would definitely be a little more complex. People within investments, like stocks, bonds, that also be a complex. Even if you itemize, depending on what is on Schedule A, what deductions you're itemizing, that could also be considered a complex tax return.
So when you call the IRS, if you're needing to find out something for a client, how long do you have to wait on hold before you actually talk to somebody?
It could be anywhere between 1 hour to 2 hours. It has gotten better. So lately I'm seeing like about on average between 30 to 45 minutes. Usually I'll opt for a call back instead of waiting online. I'm hoping this tax season, now that they have more customer service agents, more people to pick up the phones, that the hold times won't be as bad. I do like to encourage all of my taxpayers, if you haven't done so already, please go online to the IRS's website and set up your free account. This way you can monitor what's going on with your tax account, what economic impact payments you'd received, what income's on your account, what tax returns are outstanding, what tax liabilities you have. You'll have that all at your fingertips, and you'll save yourself the call to the IRS. That's
a really good tip. I don't remember if I said it the last time you were on, but when I bought my home, I needed to go back and find out what my basis was for my Roth IRA because I had done it years ago and I couldn't remember. And I created my account on the IRS's website and went back to like 2013, 2012 and found out how much I had put in my Roth IRA to get my basis. So.
Perfect. See, and that's a success story I'd like to hear.
Amber, you gave me that tip a couple of years ago. That's great. Yeah, and you log on and you actually can like find all of that information that you're potentially digging through your old mail for.
Yeah, I think you did mention that on the last podcast, and I did mine also. And I think where it's probably really good for people also is we have a lot of clients that pay quarterly. And I'm assuming like sometimes people may go a month or something and not know, did I actually make that quarterly payment? They could just log in and see if that quarterly payment was even went through or if they had sent it in.
Exactly. And that's a common circumstance too, because you're making your quarterly payments every 3 months. You're really not, it's not the forefront of your brain. So you definitely want to have that resource available to you so you can check in and be on top of your tax situation. Also, as a small aside, you also want to keep an eye on your tax situation because of the prevalence of ID theft right now. It is out of control, and I encourage all my taxpayers, please be proactive in protecting yourself and your family too. We do have the links to set up an IRS account on our website, as well as one for the Franchise Tax Board of California. In addition to that, if your identity's been compromised, there is a link available on our website for you to go to the IRS and set up what's called an identity protection PIN, meaning that no one else can file your return without this PIN number.
So basically, because like what if someone steals your identity, what they could do is file a false tax return under your name. Is that what they're doing?
Exactly. I've seen ones where people have filed false tax returns in another taxpayer's name, claim their children, claim some other random person's children, claim education credits, and just really made a mess of things. And there's just so much work you have to do in order to unravel the damage, to do damage control. So that's why it's in our best interest to be proactive.
Is there any other updates or tax code changes for 2023 or 2022?
The biggest ones I'd like to mention is that there should be no stimulus payments. Nobody should be expecting any stimulus payments. Also, I know quite a few of us were eligible for the Franchise Tax Board's middle class tax credit. Please be assured that it is not taxable income. It's that kind of income, much like the stimulus payments last year and the year before, even back in 2008. Those payments are basically for the public benefit, for the greater welfare of the public. So it's not really taxable income. But we won't be seeing any of that. The above the line charitable deduction, if you weren't itemizing before, last year they let you take $300 off your taxable income as a charitable contribution to reflect any charitable contributions you made throughout the year. They did take that back, so you can only deduct charitable contributions if you're itemizing for tax year 2022.
What about my Gavin bucks? I know Gavin Newsom sent out money for the gas reduction. Have they made a ruling on how that's treated, or is it just ignored federally and counted state? How does that work?
From what I've seen, the Franchise Tax Board is not going to be counting that as taxable income, and it's expected that the federal is going to comply with that too.
Okay.
It's going to be in accordance with that. Yes, trying to save us every tax dollar we can.
Can you share any tips or strategies for maximizing deductions and minimizing taxes owed?
You definitely want to do a tax plan first and foremost, because we need to see where you are and where you want to go. And then we want to just evaluate all the different factors that are impacting your tax situation. For some folks, making an IRA contribution might be in their best interest. For other folks, they are considering buying a house. I'd like to encourage my taxpayers, hey, try to buy that house at the beginning of the year so you get the full year's worth of mortgage interest and all of that property tax. Try to avoid buying it at the end of the year because you won't get the full value or the full benefit of the deduction. So it's a timing thing and looking at the different factors in your tax situation to see how we can save you money. And also a big one is reviewing your withholding. You want to do a periodic review, maybe semi-annually, maybe even quarterly, if you're a high income earner, because your W-2 or your withholding might be off and you might end up owing at the end of the year. And there's no sense in paying the IRS or the Franchise Tax Board extra money in the form of a penalty when you could just adjust your withholding in the middle of the year and you've met your tax liability.
I have one. This one, though, is not for the 2022 year, but the IRA, the Inflation Reduction Act, brought back the electric vehicle tax credit for a lot of pure EVs. So right now, depending on how much money you make, most people will be able to buy like a very nice Tesla or, one of the cool Ford Mach EV Mustangs for under $45,000 once the tax credit's taken into account. So good tip you can't use it this year, but you could definitely, if you buy one in 2023, you could use the credit on your next year's return.
Exactly. And that's where that plan would come in. And I love the fact that they remove the caps off of the vehicle. So a lot of taxpayers, they'd go out to buy the electric vehicle, but then they figured out, oh no, this particular vendor has already met their cap, so it's useless to me. So I'm glad to see they've gotten rid of the cap. They've expanded it so more people can take advantage of it too.
Yeah. Now we know which cars Matt's looking at.
Yeah, I give it away.
We've been talking about it for a while.
Yeah.
One of the things that I thought was really neat when we did tax planning last year for a couple of clients is that it listed out all the items that they could do to reduce their tax liability at the end of the year. And it was very detailed on how and the steps we would need to take to get the deduction. And I think that's extremely helpful as you're kind of going into the last quarter of the year to know if I do these, 3 or 4 things, I'm going to be able to save X amount of dollars on my tax return. I mean, that way you're prepared. I mean, once you go file your tax return, you've already taken the steps, hopefully at that point, to do all of those things if you've done a tax plan.
Exactly. Being proactive is really what's your saving grace. Being able to take action before December 31st of that year could save you hundreds, if not thousands of dollars.
And can you discuss the difference between taking the standard deduction, the itemized deduction? I think people get confused about the differences of those two.
Yes, that's a big area of confusion for a lot of folks. With the standard deduction, that's just the base amount based on your filing status of that the IRS subtracts from your income. Basically saying, okay, this amount we're not going to tax you on. We're going to subtract this from your income.
It's free money.
Yeah, free money, right? So the IRS reduces that taxable income for you. And just keep in mind, this is after adjustments to income, meaning IRA contributions, for example, or student loan interest that you've paid off. So after the adjustment's after your income's been adjusted, the IRS takes that standard deduction and says, okay, for you filing single, we're going to take $12,950 away from your income to arrive at your taxable income. Now, with itemized deductions, you may realize, and that's also based on your filing status, you might realize that there's certain expenses that exceed the standard deduction. And in that case, we're going to itemize and take deductions for, say, for example, and this is the biggest one, mortgage interest, real estate taxes, even sales tax on maybe an auto that you purchased, investment expenses, charitable contributions, things of those nature.
I forgot about the auto tax. That's more reason for me to buy a new car this year. There we go.
Looking for all the reasons.
Oh, and I should mention too, my favorite, the SALT limit, state and local taxes limit. You can only deduct up to $10,000 in state taxes until the law changes in 2025. I'm hopefully maybe this year or next year, we'll just change that and people could take more advantage of
Oh, so it is for sure going away, sunsetting in 2025?
Yes, it's due to sunset in 2025. I've just been crossing my fingers the last couple of years that it'll be sooner.
People in California and New York, Connecticut, we're going to be doing backflips.
That's what I thought too. I was like, everyone in these high real estate areas are all hoping that does happen.
Because what year was that signed in?
For 2017.
Yeah, so it's been there for a while now.
Yeah, and a lot of people are hurting from that one, and the loss of the employee business expenses, not being able to take certain employee business expenses on the federal return, as I mentioned previously. With the Tax Cuts and Jobs Act disappearing in 2025, taxpayers be able to reap the benefit of that again. So, firefighters, police officers, nurses, doctors, pilots. Now you can start incorporating those or adding those deductions back to your tax return and expand your itemized deductions. Small, tiny aside too, as you know, they eliminated the exemptions amounts. There's a certain amount of money that you would be able to subtract away from your taxable income for every person that was in your house. They still use the exemption amount certain education tax credit, or to see if you can claim someone as a head of household. But the ideas with the Tax Cuts and Jobs Act was to expand the standard deduction and eliminate exemptions. Once 2025 rolls around, we'll go back to rules as normal. You'll be able to itemize and so on and so forth.
What about individuals who are self-employed or have multiple sources of income? Like, how do they best prepare for the tax season?
Definitely making sure you're reviewing records. And this is something you want to make sure you're doing throughout the year, that you're keeping contemporaneous, accurate records, and you're going back and reviewing, because towards the end of the year, that's when we're going to need to kind of get together and see if we need to make any kind of course corrections. But we can't do that without having the right information first. So you definitely want to make sure you get your bank records together. Business taxpayers, if you have an accounting or bookkeeping software in place, make sure you've cleaned up all of your accounts for bookkeeping so your business tax return is ready to roll, and then subsequently your individual tax return.
And then what about maybe the smaller businesses who are taking payments via Venmo still? What's going on with that? Because I know we had some controversy with clients. A lot of people are asking. What's going on with Venmo? No,
I'm so glad you asked, because just recently the IRS has said, okay, we're kidding. Give us a second. We're going to give everybody some relief this year on the reporting requirements, because we still have to iron some stuff out and not enough people know about what we're going to do. You still might receive a 1099-K, but if you're an individual, if it's a personal nature, you won't have to report and back out certain figures or anything like that. This is our year of grace while the IRS kind of hammers out the details. But next year, we should expect to see a more stringent filing requirement when it comes to the 1099-Ks.
So what are they looking for? Because I know with my friends, we'll send money back and forth, maybe for a golf round, or you owe someone money here or there. Are they going after that? Like us just paying each other back?
Oh, no. Nothing like that, fortunately. They're just basically looking out, making sure that people are reporting all of their business income. Now, fortunately, a lot of the third-party merchants like PayPal, Venmo, they have it so you can set up a business account, so you can draw that line in the sand, business versus personal.
That's good.
There is a button on there. So it's for good. They're looking for the goods and services, right? Your transaction. You sell trading cards online, and that's your form of payment. I think there's even a radio button on Venmo to be was this for goods and services? So they can kind of even you're reporting on yourself, I bought this, baseball card from you or whatever. But me and you, you booked the golf round and now I got to pay you back.
Yeah.
Not looking for that.
Okay, that's good, because there's a lot of confusion about that. I mean, I was even confused, so thanks for clearing that up.
Oh, sure thing. And honestly, I think it was causing a lot of unnecessary panic, because people had the same question as you, Matt. Wait a minute, I'm just paying my friend back for In-N-Out the other night. Are you guys going to be scrutinizing that? So, yeah, they're still working out the kinks on the program.
And then what about with Zelle? Is that the same way, or is that different just because it's bank-to-bank payments?
Oh, no, Zelle should be the same way.
And then can you discuss the impact of the recent economic stimulus payments on taxes?
Well, we definitely want to discuss, let's actually start with the business. They've expanded a lot of credits, in regards to research and development and energy tax credit. And also on the flip side, for individuals, they've expanded the energy tax credits tremendously. Back to the business, like I was saying, with the research and development, they've expanded it so you can take the tax credit and it can flow forward. You can take advantage of the tax credit sooner, so you don't have to slow boat it as much.
And an example of something like that would be from maybe the IRA, like we were talking about a few minutes ago, the Inflation Reduction Act, maybe putting solar on your home or on your business. Is that what you're kind of hinting at in a way?
Yes, and definitely with the with solar, and there's so many different solar programs out there that you can take advantage of. We just want to be careful to stay away from anything leased, or because in that case the property doesn't belong to you, so you won't be able to benefit from that tax credit.
So you're talking about if you leased the building or lease the solar?
Oh, if you lease the solar property. And that's actually a really good point, Josh. There's going to be qualified building improvements too. They've expanded that so taxpayers can take a greater deduction for any kind of leasehold improvements they make to any commercial property.
If you own maybe a historical office building, is there any improvements you could do there to get some tax credits? Or am I just kind of going a little bit too far off base?
Actually, there is something for historical preservation. I'd like to do some homework for you because that's a really interesting one.
Perfect.
Are there any resources or tools that individuals can use to make the tax preparation process easier? And I think this is a problem a lot of people have is like the stuff starts coming in the mail, you put it aside, and then you got to hope it's all still there when you go back to that stack. And there's obviously a lot of documents to collect from a lot of different places. Like, what's the best resources and tools that people can use to kind of get prepared?
Definitely check out our website for that checklist. And I'm really glad you brought up the stack of papers. You want to make sure you're keeping all of your records all in that same spot. So when I see you and when I meet with you, we can go through everything all together. You can use the checklist that we have on the website. And like I said before, you can even refer to last year's return to see what kind of information you need to compile before a meeting for your tax appointment.
Josh, what do you do with yours?
All of our forms?
Yeah.
I just compile them. I have a file folder that I put them all in.
I put mine in my junk drawer.
That's good too.
Yeah.
That's kind of where it's
That's
at.
my filing system.
I think that like everyone's online portals are pretty good though too.
Yeah, for
So
sure.
it's kind of like, just kind of speaking from experience and what I would recommend is make sure you can log in. And it's also good to just make sure everything looks accurate, right? It's a good time to reconcile, like you said, your financials or your bank records, or even like log into your mortgage company to download your mortgage statement, but also look like making sure everything is correct. They have your phone number and address correct and all of that stuff. So I think with the online tools, that does make it easier, and it's just good practice to start that, January is that month to get everything together.
Exactly.
But online is now kind of my preference. I like to download everything.
I do have all my stuff go in a file too, but the one thing I think that is easier for me is just having a checklist of knowing where I need to go get all the forms from and just logging in and downloading those, because it's either you're going to scan those and then upload them to your vault or your system to start the filing tax process, or you can just download them all from all the resources or sources that you need to get them from, and then just upload them to the vault. And I think that's so much easier than trying to hold on to the documents for a month or two while the rest of them come in, because some send in January, some send in February or March, and it's a long stretch.
Right. And you definitely want that peace of mind knowing that you have all of your information and you're not left hanging and waiting to see if another form trickles in and you're not sure what form that would be.
I think one thing that people can do probably is, like, if you had a spreadsheet saved or somewhere safe where you just had, this is all the places I need to go for during tax time, and then you just go down the list, it seems like you can make that process a lot more efficient than digging through drawers.
Yeah, tech helps.
Go ahead. So you'd think there'd be like an iPhone app, like where
Why don't they have that already?
you open your mail, you snap a picture of your W-2, it crops it perfectly and uploads it right into your tax preparer's portal. Like,
I think I might be onto something here.
yeah, we should start a business.
I know that they have the tax scanner will take some of the info, but I don't know if they have it like on the individual level like you're talking about.
Yeah,
So,
no, it should just be like, I get a tax form now, boom, clip a photo, it goes right to my tax preparer.
Well, you can kind of do that with our portal. You can take a picture with your phone and just log in and then just upload it to me and I'll get the notification.
Hey, you have my business idea already. There you go, guys. Amber's got it.
there you go, making it easier for you, Matt.
Is there anything else you want to make the listeners aware of just basically this time of year right now, or anything that they can do, or helpful hints that you found for people in just preparing at just this time of year?
Definitely don't hesitate to ask questions. And a great point that Josh made earlier, just log into your portal. Make sure you can still get in. And if you can't, definitely feel free to reach out to us. Make sure that you have you have access to all of your documents. Go ahead and pull your organizer and your questionnaire and go ahead and get working on that now so you can get that ball rolling.
All right. Well, that concludes our show today. We hope you found Amber's insights and tips helpful as you prepare for the tax season. We'd like to remind our listeners that Amber is currently accepting new clients and is ready to help with your tax preparation, advocacy, and also planning needs. If you're interested in working with Amber, you can visit her website at collaborativetaxpartners.com, and you can book an introductory appointment with her. Thank you for tuning in to the Retirement Plan Playbook. We'll be back next week with more expert advice and tips to help you plan for your retirement. Until then, stay tuned and stay on track with your retirement goals.
Thank you for listening to the Retirement Plan Playbook. Click the following button to be notified when new episodes become available. To get in touch with our team, call us at 909-296-7977 or visit our website at www.rpawealth.com to schedule a complimentary consultation. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of RPA Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.